Hey, good afternoon, and thanks for joining us. Before we get started, can everyone hear me? Just drop a note in the chat box to let me know if you can hear us. Is any okay? We got it. All right, perfect. Okay, welcome to our Homebuyer Series. Today we're gonna cover insurance. I'm Sam Fazio with Theriault-Fazio team at Origin Point, and I'm a senior vice president of mortgage lending. Our team is one of the top mortgage teams in the country because we surround ourselves with some of the best and brightest people in the industry. And that's going to lead us to our special guest today, Joe Janicki from Brightway Insurance, who's going to give us some information here on insurance and what is really going on in that market. If you're a home buyer or a realtor, you know that insurance is a very hot topic. And causing us to not have some loans get approved or causing people to pay some higher premiums. One of the things here that I've worked with Joe recently was as I recently had a home buyer who was using his father-in-law to get insurance on the house, and his father-in-law was unable to get insurance on the house because of the age of the roof. I reached out to the client and I said, "Hey, would it be okay if I had Joe talk to you and run a quote for you to see what they can work out?" Long story short, Joe and Brightway were able to get the home insured, and my buyer was able to get their home that they were looking at. So post event today, we're going to send in some information about the call, along with notifying our winners for the raffle. So I want to thank everyone so much for being here, and I'm going to turn it over to Joe.
All right, thanks, Sam. I appreciate you having me.
You're welcome.
Again, my name is Joe Janicki. I'm with Brightway Insurance. We're located here in Lake Zurich. I'm going to share my screen here. So just give me a second. We'll get this up. So really want to talk to you about what's been going on in the insurance market. Can everybody see this okay?
I can, yes.
Okay, perfect. So a little bit about us. We are Brightway. We are an independent agency, meaning we have access to over 100 different insurance carriers. So I always tell people we have everybody except for State Farm and American Family. We write the rest. It gives us a really cool opportunity to be able to serve our clients, find the best coverage for them at the best rate. It allows us to also do some things with challenging homes that might otherwise be ineligible with other companies. So we do operate with a team approach. Our entire team here works together with a help first mindset, meaning we are here to find you the best solution, whether that's with us or one of our carriers or with another place that we know is going to be better suited for you. Our job here is to really make sure that we're prioritizing you and your needs every step of the way. And we're at last committed to delivering an exceptional client experience. So what's going on with insurance? Well, I'm sure everybody is excited to open up their tax bills lately, or the cost of anything else everywhere that we go. We've been seeing these prices rise, and especially insurance premiums. So in the last 3, 4, even 5 years, we've seen insurance premiums climb not just a little bit, but a lot of it, and exponentially increasing year over year. Some other things we've seen besides the insurance rates rising, we've seen some drastic underwriting changes with regards to what companies are writing and how they're writing it. We've seen some companies leave the market altogether, meaning they used to write insurance here in Illinois, Wisconsin, neighboring states across the country, and they've decided that it's no longer profitable for them to do that, so they've actually left the market altogether. We've seen cancellations and non-renewals. People that have had insurance for many years with certain companies have now gotten non-renewals based on things like roof age or roof condition or overhang from trees, things like that. Some things we've never seen before in the market, and seems to be getting progressively worse in our area and more challenging, in ways that we've never seen before. So we'll carry on with, trying to figure out how did we get here, right? Well, the biggest reason is, my slide's not working. There we go. This is our biggest reason. So we live in an area where we have seen an uptick in convective storms and hailstorms, wind and hail, and in increasing quantities more than we've ever seen before. But beyond that, we have another issue in our state, which is the what we call an assignment of benefit, meaning a roofing company and or contractor, and I'm sure some of you have had them knock on your door, will come to your door, have you sign a little tablet or a form allowing them to essentially file a claim in your behalf. Whether or not that claim is valid or not really doesn't matter in most cases to them. They want to get as many of these submitted as they can. And it's pushing a lot of claims through that would not otherwise be filed, which is ultimately hurting the client, the insured, because if a claim is not paid, maybe there is not actual damage up there. Maybe the pictures they showed the homeowner were not the actual roof that is that homeowner's. That claim is still a claim and ultimately counts against that homeowner as a claim going forward. So we've seen a lot of that. We've seen a lot of roof fraud, but more importantly, we've seen a lot of storm damage. We just had a storm, I don't know, a couple of weeks ago in the Cary area here that did quite a bit of damage, trees, hail, etc. So speaking of which, when we look at the saturation of billion-dollar loss events, this data is from NOAA. It's from 2024. We always think about the storms that happen in Florida, and we think about the fires in California. But I think what we miss is that when we look at the saturation of billion-dollar loss events, so these are events that were over $1 billion, the largest saturation is right here in the Midwest. So these storms, again, as you can see, are increasing. And they are causing damage here, which ultimately is causing rates to climb. So we look at our data back to 1980 through 2023, and you can see the trend starting from 1980 going to 23's data, where they had, I believe, 28 events that were over $1 billion in losses. So let me skip away here. So looking again, this is just another graph. And when we look at like the 80s, we look at a 9-year time period here in the 1980s, 1980 and 1989. They had 33 total events that were over $1 billion in losses. Now, again, some things has changed. The price to reconstruct or the price to rebuild has obviously gone up since the 80s. So yes, that accounts for our $1 billion being more. But you look at, these are all in 10-year increments going down. And then we have 5 years, 3 years. Last year alone in 2024, there were 27 events compared to the 10-year target where there were 33 events back in 1980. So are we seeing extreme weather play a role in what's happening in our insurance market? Absolutely. So we know there's more losses. So we've also seen, on top of the losses, an increased demand for remodeling and construction. And this goes back to COVID. We saw during COVID construction and material costs and all that just skyrocket. And although we saw that come down a little bit and plateau, it never really came back to the levels that they were at pre-COVID. And that's everything from plywood to lumber, but more importantly to labor. We've also seen some labor shortages. And with that, when you have more losses and higher costs to repair or pay for those losses, you're going to ultimately end up with higher premiums. We've also seen litigation. More of these claims are ending up in court every single year, and court cases are expensive when you have attorneys and court fees costs involved. So all those things play a factor in these increasing rises in insurance premiums. So I'll just skip ahead here. Whoops, I don't need to see about that. When we look at what key factors are affecting our insurance premiums. So credit score is a factor. They do look at credit. It is a soft pull, meaning you will never see the pull actually show up on your credit. But they look at, how you pay things. They also look at your insurance score, which does take credit into effect, but it also takes into account your insurance history. How many years you've been with the carrier. What your, and we look at claims history too. But more importantly, they're looking at, are you the type of person that moves from company from year to year to year, right? Or are you somebody that is going to be stable and end up ultimately being profitable for them? Those are going to rate completely different. They look at the property type and location. So if you are in a neighborhood that may be higher crime, if you're in an area that is far from a fire station and maybe has to have hauled water pulled in as opposed to having a hydrant within a short distance, those things are going to rate completely different. So those are things to consider. The biggest issue right now that we're seeing in our market is related to roofs. So what we've seen change over the last 3, maybe 4 years is companies are really starting to pull back on roof age. We saw some for many, for about a year or so, actually pull back to 10 years in roof age. So meaning, and I'll give you an example, Travelers up until recently said that if your home has a roof that's older than 10 years, it is not eligible for an insurance policy with Travelers. We've seen them loosen that a little bit. And by loosen that a little bit, I mean they went to 15 years. But what we're also seeing is that when they're going to these older years, meaning 15 years or more, they're also decreasing the coverage available on these roofs, meaning that we're used to coverage where a roof is covered for what we call replacement cost. We have a storm roll through, there's damage from hail, there's damage from wind, shingles are missing. An insurance company during replacement cost will replace that roof and pay for a brand new roof. So what we're seeing them do now is depreciate the cost of that roof, especially if you're over 15 years of age. And so now you have a 15-year or a 20-year-old roof. They're going to tell you, well, we're only going to cover it for the new price minus whatever depreciation over the last 20 years. So coverage is way down on roofs. And the reason for this is because they're seeing when claims are filed and at what age are roofs starting to deteriorate. And this is specifically related to asphalt shingle roofs, also wood shake roofs, and we'll get into wood shake here in a minute. But they know that that's when roofs are needed to be replaced. So they know that they're going to cover them for replacement cost up to that point. My prediction is down the road, I see the insurance companies changing this to where they cover the roofs at a depreciated schedule from day one. No different than my vehicle being a 2016. If it were pummeled in a hailstorm, they wouldn't pay me to go buy a 2025. They would pay me the value for a 2016. The roof is technically no different. It's outside on the house. It ultimately should be covered that way and probably will be in the near future. The other thing we need to be aware of is wood shake. There are less than a handful of companies in the standard market that will still write a wood shake roof. Most companies have decided that they are no longer eligible or within their appetite. This means we have to look at the non-standard market, or what we call excess and surplus lines, meaning they can still be insured. The cost is just significantly more for these homes now that have wood shake. We're seeing a lot of wood shake homes be replaced with a composite material. There's one out there called Da Vinci. Looks like wood shake, not wood though, and many homes are transitioning over to that. We've also seen where companies are starting to look at time-lapse videos on homes. And you see the one above the wood shake is an asphalt shingle roof, but there's staining on that roof. So companies take low-flying aircraft, they fly continuously, they pull pictures overhead from roofs, they dump it into AI, AI analyzes these roofs, and then determines time-lapse what's going on with their risk, meaning is there staining, is there tree overhang, are there things they need to be aware of, is there debris in the yard, and they make determinations on these based on these photos. Well, they've figured out that this roof staining is actually a microalgae that eats the granules in the shingle itself. And some companies now are sending out repair notices to have these roofs, what they call a soft wash, cleaned. And it's basically they killed the algae, rinse it off, and move on. So lots of things, like I said, we haven't seen before. When we look at other underwriting changes, we've also seen deductible changes. So deductible, I remember back when I first got my first policy, was always $1,000, right? Everybody is used to that $1,000 deductible. We've since seen most companies move to a flat 1% deductible, or a flat deductible on what we call all other perils, meaning everything except for wind and hail. But wind and hail moves to a 1% deductible, meaning 1% of whatever your replacement cost is covered at. So if they estimate, it's $500,000 to rebuild your home from the ground up, your deductible for wind and hail would be 1% of that. So these deductibles are getting high. We've seen some companies now come back into the market and offer a 2% deductible. So 2% of that $500,000 would be your deductible for wind and hail, meaning you're self-insuring for a good portion of that roof. So lots of things are changing, and with regards to that. We're also seeing some pullback on older homes. However, companies are a little bit more flexible on an older home than they are on an older roof. It is always better to have something with recent updates, especially with your your mechanicals. Plumbing should be copper, not galvanized, things like that. So how can we help? Obviously, we talked about roof age. The roof matters, materials matter. So be aware of limitations when shopping. If you walk up and you see an older roof, or it's granulated, or something just doesn't seem right, that's the time to start asking questions about the age of that roof, because it could lead you down a challenge down the road for eligibility when it comes to insurance. Older homes, it's always good to do some investigative work on that end too. Because some companies will push back on an older home, and they will absolutely push back on older plumbing. So if you go underneath the home and you're in the basement and the plumbing is galvanized or some other material that's not copper, make sure you do some investigation on that as well. I always tell clients to shop early. Don't wait until you're under contract to start that process. In most cases, I know our team is always available. If you run into a situation and you have questions, we are always happy to take a look at things. And a lot of companies will just say, hey, I'm looking at this home. I'd like to buy this home. Can you tell me what it looks like for insurance? It's not a hard thing to do, but we can give you a good idea of what you're walking into, so you don't get to the finish line and then find out that it's going to be thousands of dollars more than you had budgeted for, and now we're no longer able to buy our home. So our office here, we do write with over 100 different companies, so we do have a market for everything. There's not a home that we cannot write. We can help you out with looking at clue reports, which is finding out if there was a claim filed on a home, how that claim was filed, what it was filed for. We can also look at flood zones. FEMA has a map online, but it's not always very easy to read. So we're always happy to look up and figure out what flood zone a home is in if you're concerned with that. And to touch on that real quick, I just want to mention that, with the government shutdown, FEMA flood policies cannot be issued new right now. Existing flood policies that are in force with FEMA are still valid. But we do have to go private market on all flood policies right now. So doesn't mean there's no flood insurance available. It is absolutely available. It just will all be private flood policies as opposed to through the NFIP FEMA program. So any insurance related questions, our team is always here to help. I know I flew through that. Sam, do you want me to touch on condos as well a little bit?
Yeah, Joe, if you can touch on that, because that's also a hot topic for people.
Absolutely.
Not just on them getting the insurance, but the actual condo getting insured as well.
Yeah, absolutely. So one of the things that we run into a lot is the a condo itself being underinsured. And when we look at a condo, we look at it no different than a home. And the fact that if there's a fire, if something happens, to the condo itself, we still have to rebuild that condo, and our construction costs, material costs, labor costs still come into play. So we have to calculate that accordingly based on what our current labor and material costs are. How do we rebuild your condo? So we have calculators for that, but it's good to not just guess on that. It's good to have an accurate number. The other thing I find on condos that we miss is the liability number. So liability on a home and a condo is extremely inexpensive, but it is imperative to make sure that you max out your liability on your condo. Why? Because we have a unit that is adjacent to other units. So I give the example, and I gave it this morning in a talk, that let's just say I turn my dishwasher on, I head out the door and I go to work, right? And my dishwasher hose breaks, leaks, floods my condo, but also floods 3 floors below me. And I'm not there to shut it off, so it just runs. That would be covered under your liability portion of your policy. And many people undervalue what they need for liability, especially in a condo. So make sure you ramp that up. It doesn't cost very much to do that. The other piece I think we miss often is something called loss assessment coverage. So we are in a market right now where not only is insurance going up for regular people that own homes and condos and this and that, but it's going up for the homeowners associations as well. And they're seeing things happen, like I talked about deductible increases. They're seeing huge deductible increases. They're seeing underwriting challenges. They're seeing changes in what they can allow and what they can't allow, like grills and other things. But premiums are going up, deductibles are going up. So in the event that they have a claim that impacts a common area, or maybe a roof on a building that you live in, something that would be a claim related to the condo association itself, and they don't have the funding to pay the deductible or have enough coverage on the policy to pay for whatever that claim was, that condo association is going to assess what's called a special assessment. That special assessment is going to go out to the condo owners. Everybody's going to get a bill, and everybody's going to take part in paying for whatever they were unable to pay for. So when you have loss assessment coverage on your condo policy, and we usually recommend, $20,000 to start with. Again, relatively inexpensive coverage to add, but that loss assessment coverage would pay for that special assessment for you. So you're not out of pocket. The insurance company is going to pay that special assessment. So just something you don't want to skimp on. Make sure you've got that. And again, relatively inexpensive coverages to add those two, liability and loss assessment, probably the most commonly missed things on condos. So that's all I have. My information is on the screen. I know that we mentioned if there's questions, you can feel free to reach out to us. My email is there. If you put your question in the chat, we can, I will respond to every single question that we have and make sure that we get you an answer. But I appreciate the opportunity to be here. Any other questions for me, Sam, that I can answer that I missed?
No, and I think I'm like looking at our Q&A questions that came in here, Joe, but I think some of these are more for one person asking, can Brightway integrate with external brokerage systems? So I don't know exactly what that means for me. Or from your end, you might know. Give me 1 second here.
Yeah, I guess I need some clarification on that. We are a broker, so again, we work on with over 100 different insurance companies. We don't charge broker fees. We do that all internally here. So we're integrated with other companies, insurance companies, your Travelers, Cincinnati, Progressive, you name it, we've probably got access to it. But we do that internally here. So I don't know if that's what they meant or.
Yeah, I don't know. And then I have someone asking, popping up here. Are claims handled internally or through carrier systems?
Through carrier systems, we do get involved with claims, and we try to quarterback and work through the claims process with our clients. Obviously, we want to be the first call. If there's something that pops up, I want to talk through that with you. We want to make sure that we should be filing a claim, number one. In this market, filing claims for the small things is not always the best idea. So let's chat through it. Maybe we send somebody out to get a free estimate and look at things first. And then if we do need to file a claim, we're going to walk through that process with you. Sometimes we will file it for you with the carrier. The carrier has their own claims adjusters that they send out to do their assessments, but we are there as an advocate to work on your behalf through the claims process.
Perfect. Yeah. So Joe, thanks very much. And again, we appreciate your time, and more so, we appreciate your help and advice that you bring to our clients and everything. So that's always appreciated. And then again, for anyone who was on this call today, we're going to have a raffle, and we'll notify the winners a little bit later today. And again, thanks to everyone for joining the Homebuyer Series here with the Theriault-Fazio team, and wish everyone a great rest of your day.
Thanks, Sam. Appreciate the opportunity.
All right, you're welcome. Thank you. Thank you.